Hi there, everybody. I'm Ron DeLegge with ETF Guide, and in this episode, we're going to talk about why owning gold ETFs is the better way for investing in gold versus owning physical gold. And I'm going to lay out some very important reasons why gold ETFs provide a tremendous advantage for individuals and even institutions that want to invest in gold. So before we go any further, I need to give you a framework for where and how gold, if you're going to even invest in it, where it fits into an overall portfolio. Now, as I teach in my online class titled Build, Grow, and Protect Your Money, a step-by-step guide, there are three components of a well-built, architecturally sound investment portfolio. The first component is your core. The second component is your non-core. And the final component is your margin of safety. By the way, the link to my online class is provided below in the comment section, so you can check that out. But each of these three sections or components of your overall portfolio hold investments that are deliberately different. So they're complementary in nature. They're non-overlapping. And so that's how these three components work with each other. The core contains the very broadest diversified exposure to the major asset classes like stocks, bonds, commodities, and real estate. And you want to use index ETFs that are close proxies for each of these major asset classes. So that's your core. Your margin of safety deals with the part of your portfolio that's earmarked for investments that offer principal protection or safety. So there's 100% liquidity, zero volatility. This is where your risk-free assets go. And then finally, your non-core portfolio, this is where you can take a little bit more risk by investing or trading in non-core asset classes or assets. Things like sector ETFs, single country ETFs, individual stocks, leveraged ETFs, private equity, venture capital, cryptocurrencies. See, these are all things that are what we would refer to as non-core types of assets, and that's what gold is. It's a non-core asset. This is where it belongs. If you're going to invest in it, it goes into your non-core portfolio. And those that want to debate me on this, well, listen, gold is not representative of the entire commodities group. It's one commodity within the much bigger group. You've got agricultural commodities and energy commodities. So gold is a non-core asset, and it belongs, if you're going to invest in it, in your non-core portfolio. So that's the framework for portfolio construction. Now let's talk about gold and taxes. Where is it best to own gold? Well, think about it this way. Gold is not very favorable in terms of long-term capital gains versus other types of assets. Long-term gains currently are taxed at a 28% rate, which is almost double the 15% rate given to similar gains in stocks and bonds. Short-term gold profits are taxed at the investor's ordinary income rate, which is similar to the way that short-term profits are taxed for mutual funds and stocks and ETFs. So if you're going to own gold, tax-wise, it's most beneficial to do that in a tax-deferred type of retirement account, something like a traditional IRA or SEP IRA or even a 401k, or perhaps even holding gold in a tax-free type of account like a Roth IRA or Roth 401k. So let's examine some key reasons why owning gold via ETFs is the superior strategy compared to owning physical gold. First, ETFs have lower acquisition and ownership costs. Some of the hidden expenses of owning physical gold is you've got these price spreads charged by these gold bullion dealers, which can be massive. Sometimes upwards of 3%, maybe even more, depending on the size of the trade. By comparison, the bid-ask spreads for the largest gold ETFs by assets, funds like ticker symbol GLD, the Spider Gold shares, charge currently just 4 basis points. That fluctuates, but that's a pretty tight bid-ask spread. And the beauty of this is that these economies of scale apply to whether you're doing a $2,000 trade or a $2 million trade. It really doesn't matter the size of the actual investment that you're making into the ETF. These economies of scale, these bid-ask spreads, the tightness of them, that's passed on to you as the gold investor. And that's a huge advantage. Also, you've got gold ETFs with even lower annual expenses than GLD. I know it's the biggest and the most popular and most discussed, but it's not the cheapest. You've got other funds like GLDM, that's a Spider Gold Mini Shares, which has a much lower expense ratio of just 18 basis points. And for the longer term investor, that translates into substantial cost savings. So that's one of the first major advantages. Let's move on to the next. Let's talk about the daily liquidity that ETFs provide, the ability to convert your gold holdings into dollars is easily accomplished with gold ETFs. GLD, for example, has average daily volume of around 14 million shares, and it just hit 45 million shares traded on August 11th. That was one of the biggest trading days for GLD in terms of trading volume. And let's not forget that this massive trading volume on August 11th for GLD, it happened during a historically slow and ho-hum period of the year because Wall Street likes to go on vacation in August. But GLD's trading volume, it did not go on vacation. And this is the sort of trading volume that gives us and gives you as investors adequate liquidity, the ability to convert your gold holdings into dollars. On the other hand, converting physical gold holdings into cash isn't as fast compared to gold ETFs. Let's move on to the next big advantage, and that's that ETFs give you the opportunity to generate income on your gold holdings. So an asset with no earnings or dividend yield like gold, it produces zero cash flow. And owners of physical gold are stuck with this sad reality. On the other hand, owners of gold ETFs have the ability to sell covered call options on their gold holdings, so long as those gold ETFs that they own have underlying options traded on them. The big ones do, like GLD. But this trading flexibility offers tremendous advantages because it converts gold into a cash flow producing asset. You can't do that with physical gold. This is very important because for those of us that are at the retirement phase of our plan, we may want to generate more income. That's the goal. It's not necessarily growth. And so if you own an asset like gold in your portfolio, this is a great way to generate additional cash flow. And it's a huge advantage that you get with gold ETFs that you do not get with physical gold ownership. Here's another huge advantage. ETFs provide the ability to leverage. So leverage allows you to magnify your bets, your potential gains. Of course, that works the opposite, right? Because you can magnify your losses if you're wrong. But if you're bullish on gold, you've got 2x gold bull ETFs like ticker symbol UGL, and you've also got the 2x gold miners bull ETF, NUGT, which allow you to get 200% daily exposure to gold-related assets. Now, unlike ETFs, holding physical gold does not allow you any leverage, which is constraining, especially if you're super bullish on precious metals. So using leverage ETFs also allows you to obtain more exposure with less capital at risk. For example, instead of risking $100,000 by owning physical gold, you can allocate $50,000 to a 2x gold ETF, which will give you similar exposure, but with less money tied up. Keep in mind that leverage will increase your volatility as well as risk, but that's totally normal for leverage trades. Next up, ETFs provide indirect gold ownership. For example, Warren Buffett's recent addition of Barrick, this is a gold mining stock via Berkshire Hathaway, is what we would call an example of investing in gold indirectly. He's not owning physical gold, but he's got exposure to physical gold by owning gold mining stocks, in this case, Barrick. So funds like, for example, the iShares MSCI Gold Miners ETF, that's the global gold miners ETF, RING, offers exposure to a global diversified portfolio of gold mining stocks whose success is closely tied to the price and performance of precious metals. Here's another advantage. ETFs provide the flexibility to own physical gold. That's even if you want to own physical gold. So let's suppose that you're the type of stubborn old coot that wants physical control of your gold. Well, ETFs like the Van Eck Merck Gold Trust, ticker symbol OUNZ, will gladly accommodate you. And since OUNZ has physical gold that's held in a segregated fashion in the name of a trust, each investor's pro-rata share of OUNZ represents a pro-rata share of the trust gold. The gold purity level is almost 100%, which for most of us should be more than adequate, even the most demanding of gold bugs. So in summary, I've just given you 6 strong arguments for investing in ETFs as a better way for owning gold, whether it's minimizing ownership costs or creating an additional source of income by selling covered calls, the flexibility to convert your shares into physical gold, or offering you daily liquidity. The bottom line is that gold ETFs easily beat owning physical gold bullion. And keep in mind that a well-designed investment, when you think about it, it should give you maximum liquidity, maximum flexibility, and also minimal cost. And all of these benefits, again, come with gold-linked ETFs, whereas owning physical gold, physical precious metals, reduces your flexibility, it reduces your liquidity, and it increases your costs. So stick with ETFs as the better way to own gold and other precious metals. These same principles I'm giving you apply across the board. If you're going to own other types of precious metals, whether that be silver or platinum or palladium, the same principles apply. And if you enjoyed this episode, hit our comment section below and tell us. By the way, I should mention that we featured a recent ETF Battles series. That's our weekly show, ETF Battles. We did an episode all about GLD versus GDX, and those two gold ETFs battled each other in a couple of key categories. So I'm going to also provide a link to that particular episode in case you missed it. And that will give you an idea of some things to think about before investing in gold and some things that can help you guide your decision before choosing a gold ETF to invest in. Well, that does it for this episode. I hope you've liked it. Again, post your comments below and hit that thumbs up button. Be sure to subscribe to ETF Guide TV. And until next time, we'll catch you. I'm Ron DeLegge with ETF Guide. Thanks for watching.